What's going on, traders? Welcome back to the weekly Forex Outlook and Reviews. It was a hard decision today to figure out whether I was going to do the reviews or not. Coming to the close of February, we can see that the markets, especially with the dollar, have really rallied, and it's really hard to get a directional bias because we're recently coming off the back of uptrends or downtrends, and with this last move over the last couple of days with the dollar, it's kind of thrown us off our directional bias with our trends. Now, it could be a good sign that the dollar may be recovering and we might start seeing some strength moving into March, and that would be absolutely fantastic. But with Biden in place, we haven't really seen the dollar doing too well. When Trump was in place, we saw that the markets were moving pretty volatile, and that's what we're looking for as traders. But nonetheless, we have had a great February with some great trending markets, so I hope you was able to take advantage of that. And today we're going to go over 11 pairs. Now, today's biases will remain in place for at least 24 to 48 hours. I always advise you to go back on Tuesday and just go over your charts, clear them, mark your key levels, identify your buy and sell targets, your retest levels, etc. Because the sentiment can change within minutes in the Forex market, and you always have to be one step ahead, or at least keep up. So the pairs we're going to go over today are Pound USD, Pound JPY, Euro JPY, USD Jpy, Euro New Zealand Dollar, Euro Aussie Dollar USD Cad, Euro USD, Aussie Dollar USD, New Zealand Dollar USD, and gold. Now, last week we done these 11 pairs and we managed to hit the directional bias 11 out of 11. Now, I'm not so confident this week simply because of the dollar's move, but we'll do our very best. So what I'm identifying here on Pound USD is a very strong uptrend that has kind of come to an end at this moment in time. Now, what I'm always looking for a potential reversal in the market is I'm looking for price to break structural lows where wick rejections have formed, creating key levels where price was failing to break below. You can see that the dollar has literally ripped through every single key level that we could have pointed out to the left here, indicating dollar strength. That being said, I do believe that the market will continue to push down next week based on this evidence, and for that reason I see this level here around 138.45 as being a target level in the market. Now, the thing is, we have this as a retest level because the overall trend is still up, and until the major high or low, which is this level here that made this high, is violated, then in theory we're not really sell bias. So I would say the safest option is one or two things here. If price comes back to retest 138.45, don't look to buy immediately. You'll be buying into a really strong downtrend, especially an intraday downtrend where the bears are totally dominating, lower lows and lower highs are being formed, and you don't want to just buy off of a bounce just because the level looks strong or price has made the previous high low that made the high. You want to see price react to this level. Once it reacts to this level, if it does then continue bullish next week, the pound decides to, or the pound recovers this move here and starts to retrace and continue on with the higher time frame trend, which is up, then I would say patiently wait for the markets to break 139.62, get a convincing break close above, and then look for your targets back to the upside. This kind of bounce off of this level will give you your evidence, and the break close above will give you your confirmation. So always wait for that. Now, if price does continue to push down, the dollar continues to remain strong, I wouldn't say we're looking for a retest level here. Let's get convincing evidence of price breaking this major level. It's a very important level in my opinion, and I'd like to see it break below. Once breaking below this level, then we can look for some sort of retest. And in terms of targets, we do have lows where price could bounce into and find traffic, but I would say you'll be focusing your attention mainly on getting your break even trades. Once you've got your break even trades, then you can target your 1 to 2s, 1 to 3s, or even 1 to 5s in some instances. So this is kind of my idea with Pound USD, just following the structure, understanding the behavior, identifying my key levels, and making a plan. So that's my analysis on Pound USD. Next pair we'll take a look at is Pound JPY. Now we can see here that the pound has been strong for quite some time now. It has been trending up, which is fantastic news. The pound versus the dollar is an absolute phenomenal conversion if we're able to fly, but at the moment we're not. So it is what it is. Hopefully the pound is not going to weaken too much. By the looks of it, with Pound USD and Pound JPY, we can see that we're having a really strong pullback. Now, remember on Pound USD, I said look out for that key level, just in case we are just having a strong retracement before a continuation up. We are reacting off of this level here at 147.34. Now, my opinions are this: if the markets are not breaking previous highs, where wick rejections were formed here at 148.83, then there's a strong sign we could start entering a sideways moving market. Now, based on the lower time frame analysis, this area here is technically moving sideways. If we go to the hourly time frame, you'll start to see that. Now, based on sideways moving markets, what I'm looking for the market to do is either break close above convincingly to indicate bullish sentiment. I'm looking for price to break close below, indicating bearish sentiment. I don't have an overall bias of this market structure in terms of trends, but I do recognize that this level here at 148.83 is a very strong level in the market. So if we break close above this level, I'll be looking for my targets back to some of these highs around 150.32. If price fails to break above this level convincingly, then I'll be looking for price just to get out of this traffic area, as you can see to the left, where there's multiple wick rejections. I'll look for price to break 147.34. Once we get a break close below this level, I'll just be looking for my retest. There's no targets really to the downside here. We do have a traffic area that we could pop in here as a target sales level. With that being said, if price does retest this level, your main focus would want to be making sure you get into a break-even trade so that you're risk-free, just in case price bounces off this level here at 146.48 and then decides to flip or continue pushing back to the upside. That's kind of my bias on Pound JPY. Very simple, very open-minded with this one, and I'll just wait patiently for the markets to talk to me. The next pair we'll take a look at is Euro JPY. Now, this is almost identical to Pound JPY, to be honest with you. Now, the Euro had a really strong surge to the upside last week. Then we had a really strong push to the downside. I see price ranging again here on Euro JPY, even though there's a lot to say there's bearish sentiment in play. This could just be a retracement because we are in an uptrend, so we don't want to assume that the market is reversed yet. So I'd say, again, going down, let's say, to our 30-minute time frame, you start to see the markets ranging, moving sideways. Now we understand the behavior of that. What we want to do is make sure we make a plan based on a sideways moving market. That simply means, based on this structure, I'm only looking for buys once price breaks above 129.22. I'll look for a continuation back up to some of these highs here around 129.85. It's a 62 pip range. It's absolutely fantastic for Euro JPY. And if price doesn't decide to break above these highs here, then I'll be looking for price to break some of these lows at 128.50. This is a very strong key level in the market. We only have evidence of this. We don't have confirmation yet. But if we account for the area, look at the multiple wick rejections we got off of these candles here. Price pushed bullish into the area, retraced its whole candle, and then we had it again retrace its candle. I'd say this is a very important level, and if we break below 128.50, I'll be looking for target sales back down to around 127.68. Again, another 78 pip move. Really nice clean traffic. We do have highs here of this range where price could bounce off of, but I'm not too fussed about this level here at 128.04. Simply because I know once price gets here, I'll be at break even, and I'll be focusing my attention on price continuing to push through this range back down to some of these lows. So that's my views on Euro JPY. Next pair we'll take a look at is USD Jpy. Now, as you probably can see, I haven't marked this one up. Had a hard time trying to figure out what was happening. Now, we do understand that the dollar is pretty strong, and we also understand that the yen is not too strong, meaning that there's a very high chance that this market will continue pushing up next week. As regards to levels, I'm not sure where I'll put them, and to be honest with you, I'm not in the markets for guessing games here. I'm really looking for solid key levels to look for price to break above or break below. I'm looking for my retest levels, my 50% retracements. I'm looking to see where price can continue to as targets. And if I don't see this on USD JPY, even though I know there's a very high chance this can continue to push up, and I know there's a very high chance price can pull back to retest some of these levels here around 106.13. If I'm not convinced because the price action is not clear, the structure is not clear, then I'm staying well clear of it. So that's my analysis on USD JPY. Next pair we'll take a look at is Euro New Zealand dollar. Now maybe I should have marked this one up, and I did think I did, but clearly I didn't. So let's take a look at this. This was last week's analysis actually. This was pretty fantastic. Some people might say I just set this up, but hey ho. We were looking for price to retest this level here around 166.39. The retest was absolutely perfect, and the movement to the downside was even more beautiful, to be honest with you. The range back to the downside was around 197 pips here. From the highs, it was around 280. Pretty phenomenal back to the lows. And if he was able to get into this trade, really well done. Now, I guess because we haven't marked this up, you can't be perfect every time you do these reviews here. We might as well do this one together. So the first thing that I'm going to identify is that the overall momentum of the market is up. So it's very important for me to identify. Now, I need to ask why, because I know the euro is not super strong, and across the board, we don't really trade New Zealand dollar. But based on the fact that euro is not too strong, it must mean that something's happening over here. The New Zealand dollar must be weak. For this move to push down as much as it has, and then to retrace this whole move really tells us a lot about what we could be expecting next week. For that reason, I'll stick to buys, and I prefer to be safe rather than sorry. Now, price is breaking above a key level in the market. Now, this level is definitely very important to us because this is the level that made the lower high after the breakout of the consolidation. This is what made the lower low. Now, what we're anticipating is price to pull back to make a lower high, then continue in a downtrend. It never did that. And if price breaks above this level, then there's a very high chance that price is going to continue bullish. Now, do I really want to see price breaking back below this level at 166.44? Not really. I anticipate if this bullish sentiment is going to continue bullish, we're going to come back to some of these highs here, or we're going to retest this consolidation. Now, to be honest with you, I'm not worried about the consolidation at this stage because the consolidation turned into a downtrend. The downtrend has now retraced, potentially turning into an uptrend. So if we're going to continue up, then the behavior before that was bearish. The behavior before that was a sideways moving market. And the behavior now is bullish. So I could disregard the consolidation, and I could say to myself, well, where would price find most problems if it is going to continue up? I think the level that we have jotted in here at 168.21 is the perfect level. And what I'm patiently going to be waiting for is for the market just to potentially leave gap up when the market opens, then come back to this key level to create some sort of retest. And then once we get the retest here at this level, I'll be looking for a continuation back to the upside, which is our target levels here at 168.21. Now the range from the retest back to the high is around 176 pips. Pretty epic here. So that's kind of my bias on Euro New Zealand dollar. I like the fact that we have strong bullish sentiment here. I like the fact that price is pushing higher. I like the idea of price retesting structure, and I really like the range of 176 pips. Now, some people might ask, well, what if it doesn't retest this level and it breaks back below? Then it is what it is. If I have 11 pairs on my charts, 11 pairs to trade from, should I say, then I'll just let this one go. I don't need to be right every single time. And in fact, I only need to hit one trade a week and I'm laughing, right? One trade a week and I'm laughing. So I'll just wait patiently. If it plays out as I've planned it, I'll trade my plan. And if it doesn't, then I'll move on to another pair. The next pair that we'll take a look at is Euro Aussie Dollar. Okay. The next pair that we'll take a look at is Euro Aussie Dollar. Now, we're gathering information here. Euro New Zealand Dollar indicated to us that the euro was strong. Versus the dollar, we haven't seen much strength with the euro. That must mean that the euro is strengthening and the dollar is strengthening. With that being said, with the weakness here that we can see with the Aussie dollar and the strength with the euro, it's very likely that with these two pairs, we can convincingly say next week that we can look for buys. Now, don't get confused. Just because the euro may be strong, it doesn't mean that it's going to be strong versus the dollar. Okay, because what we've seen with the dollar is that the dollar is super strong. Okay, let's go back to this. More often than not, we haven't even got there yet. Very interesting. So when we get to Euro USD, what we should see, in theory, if we bring two strong currency pairs together, we should see a sideways moving market, or breakouts and break back ins, or just period overall, no directional bias. Now, Euro Aussie dollar is really strong. I have not marked this one out simply because of the traffic we have to the left. I don't know how to approach this one in terms of my key levels. So I much prefer price to create new form structure, which will require the markets to retrace, continue to push up, and then start to create highs. And then once highs are created, and I can identify key levels where price is going to break above, I'll then look to take trades once I get that evidence of continuation bullish sentiment, retest, and then anticipating the continuation thereafter. At the moment, I don't think it's wise for me to make a decision on this. And as I said, I'm not in the markets to be right. I'm in the markets to do my best to make a plan and then trade my plan. With Euro Aussie dollar, I think I'm going to struggle a little bit. So that's my analysis on this pair. So USD Cad is our next pair that we're looking at here. Now, as you can clearly see from the notes on the right, I have it in the back of my head that we're going to continue bullish next week on this pair. Now, if you don't trade USD Cad, I advise you to start trading it. This pair is so beautifully, phenomenally beautiful that I just recommend you all trade it. When the market is rallying down, it's gorgeous. When the market's rallying up, it's gorgeous. It's very, very, very unlikely that if you're trading USD Cad, that you will not get a good momentum shift move per day. At least one or two per day. And if the market is moving, trust the process. If the market is showing strong momentum up, buy it. And if it's showing strong momentum down, sell it. Because if it's moving, it will move. So that being said, excitement aside, I see this as a very strong push phase. To me, this is just one leg. The structural low and the structural high. Now, if the market's going to open, we're going to gap up or gap down. I'd like to see the market retrace back down to some of these lows. Actually, no, that's a lie. I don't want it to retrace back to these lows. But if it does, I will still regard this structure as buy bias. Why? Because this is a very important level which dictated whether we were going to switch bullish or whether we was going to stay bearish. This was the lower high that made the low. This was the retest with multiple wick rejections that could have convincingly told us that the market was going to continue back down to some of these lows here. But it didn't. It broke through it. This is a strong level and a very important level. So this leg, I'd look for a 50% retracement back for a continuation back to some of these highs here at 127.57. If price doesn't pull back and we start to float in the middle here around the 2700 area, then I'm just going to avoid it. I'm going to wait patiently for price to break these highs, which we can see is a very important key level here at 127.57. And then I'll be looking for my target buys back to the highs here at 128.35. It's a 77 pip range. Not as massive as some of the other pairs we've looked at, but if I'm using, let's say, a 5 to 10 pip stop loss here, I only need a 15 to 30 pip target, and I'll be laughing all the way to the bank if price does get back here because I'll be hitting my 1 to 3s. So that's kind of my idea on USD CAD. The next pair we'll take a look at is Euro USD. Now, remember I mentioned if the dollar is strong and Euro is strong, we should see this market ranging. Now, the market was ranging, but at the time that I said it should be ranging, after seeing evidence of Euro New Zealand dollar and Euro Aussie dollar pushing up, it wasn't here. So let's not be mistaken here. Whilst the dollar was pushing strong against New Zealand dollar and Aussie dollar, the dollar was rallying down. Euro had no chance. That being said, it really does validate that the dollar is strong here, and it will be very wise to stick to only looking for sells next week. Now, unless we have something that tells us otherwise, we want to just stick to sells. Now, I will be looking for a retest around 121.37 here as a retest level in the market. If the market doesn't pull back and we start to, mess around in some of these levels here around 2100 or 2800, then I'm just going to patiently wait for price to pull back, to continue pushing down, break 120.23, and then I'll look for my sells back down to 119.59. It's a 64 pip range. Am I bothered? No, because if I'm using, let's say, a 3, 5 or 7 pip stop loss, I can easily look for a 9, 15 or 21 pip move to the downside, and I definitely fall in the range of being able to take advantage of that. So I would say this: the euro is stronger versus most currency pairs as it stands. Versus the dollar, it has no chance. The dollar is super strong. That validates a lot of the analysis that we've done up until now on our other pairs, and I think it's very important for you to be mindful of that. At the moment, the pound is showing no strength. Again, that can change overnight, and I've just continued to say this just to make sure that you know, because I don't need to back myself up. I just need to make sure that you know how to back yourself up. The pound is showing no strength. Euro is showing strength against everything else but the dollar, and the dollar is dominating. Have that in the back of your mind as you start next week and continue to figure out, going through to Tuesday, Wednesday, Thursday, Friday, Tuesday, Wednesday, Thursday, what currencies are stronger. Once you identify, stick to it, because I can promise you, you'll find that your results will really be exponential if you know how to identify currency strength. So that's my idea behind Euro USD. The next pair that we'll take a look at is Aussie Dollar USD. Now, we already know that the Aussie dollar is weak. Look at it versus the euro. Absolute shambles. We know the dollar is super strong. Beautiful. This is a structural high and this is a structural low at this moment in time. The current behavior is bearish. Now, price doesn't always continue to push down, and should I say always, it very rarely continues to push down or up without a retracement. So I've popped in an area here in the market where I would anticipate, I could be totally wrong, but I wouldn't care, but I anticipate price to pull back to, which is around 78.55 as a 50% retracement of this current leg here. Now, if price doesn't push back or pull back and it starts to float around the 7800 or 77,500 area, I'm just patiently going to wait for price to break close below some of these levels here. Oopsie daisy. Some of these levels here. There you go. Around 77.07. Now, you probably just saw me pop in two lines and call two levels here in the market. It doesn't need to be perfect. It's just an area. Remember that. So if price decides to float in this area, I'm staying out. If price pulls back, I may look for the retest. But if price breaks close below 77.07, I would be very, very happy to sell this market back down to 75.82 as a target area of 111 pips. That is massive. Huge. Absolutely huge. So if this plays out, I'm going to be involved. And this is one of the pairs that I trade on an intraday basis, on a daily basis. So if I'm using, let's say, maybe a 5 to 7 pip stop loss, I can easily look for a 15 to 21 pip target, and I can fit the range of this range here. So that's the ideas behind Aussie Dollar USD. Next pair we'll take a look at is New Zealand Dollar USD. We already know that the New Zealand dollar is weak. Look at it versus the euro. Absolutely getting sabotaged. So for that reason, because I know the dollar is strong, I'm selling this all day long, baby. I'm looking for price to pull back to some of these levels here as part of a 50% retracement around the 73.18 area, as a 50% retracement of this high and low, and then this being a key level with multiple wick rejections to the left as a retest. If price doesn't, then I think that it will be very hard for me to look for my sells or identify my sells again until price pulls back, creates some sort of key levels in the market where price is failing to break below, and then only looking to sell it once we get a break or convincing break that the bears are in the market, and we can then continue to the downside. That continuation to the downside will be back down to some of these lows here where price has reacted to the most, as you can see here to the left, and that'll be around 71.48. So I'll wait patiently for that to happen, and until then I probably will put this one on a back burner until it's really giving me the evidence and confirmation I need to be able to trade it. The final pair that we'll take a look at is gold. Last week we called some absolute epic buys, but now we know that the dollar said, I'm not continuing up, baby. I'm gonna now start continuing the overall higher time frame trend, which is down. Dollar's showing its force, breaking structural lows, absolutely obliterating key levels here in the market around 170 or 1763.63, and now we've made a huge low on this level here at 1760.91. I'm patient. You're going to be waiting for the pullback. I do suspect that we should have a pullback. I mean, if the markets continue to push down, then it just is what it is. But I do suspect a pullback, and I really would be happy to see that pullback to around 1763.63. Look for a retest and then some targets back down to some of these lows here around 1760.91. It's a 443 pip move, pretty massive to be honest with you, and anybody that trades gold knows that this range is big, but that range can be destroyed in one candle. So just be very careful when trading gold. It is a very volatile pair with a huge range. It's not for the faint-hearted, and I definitely don't recommend it to beginners or those not so experienced with trading gold, because it has a mind of its own, and unless you're able to tap into it, you might find that it's going to tap into yours and absolutely destroy it. So that's kind of my analysis this week on the 11 pairs. I hope you've enjoyed it, family. We should have had better audio. We should have had better internet connection here. I'm doing my best to provide the best. And if you enjoyed it, please smash that like button. Subscribe if you haven't. Turn on notifications. And until next time, continue to trust the process.